Hello and welcome to the 2023 outlook for the Invesco Pan-European High Income FAM Fund. My name is Lewis Aubrey-Johnson and I am from the investment team that manages the fund. What I really like about this fund is that it is a very diversified spread of some of Europe's best companies, actually more than 250 in total, that are handpicked by us, that provide investors with an attractive level of income and, because of the equity component, also the potential for capital growth. Of course, last year was difficult as we had to battle against higher government bond yields and falling equity markets. However, due to the portfolio's naturally low duration and the strong relative performance of the equity component, we prevented even worse losses. The driver behind last year, of course, was inflation, which in the Eurozone is still running at a 10% annual pace. And the ECB is hiking rates quickly to get on top of this. Although pricing pressures can take time to suppress, we don't doubt the ECB's determination to bring inflation down, and we think that the rate will decline this year. The bigger question is how much economies will slow as a result of these higher interest rates, as well as higher energy prices. And that's something we will be following closely throughout the year. However, all of this has left the fund with much higher yields than we have been used to in recent years. For example, the bond component of the fund yielded more than 8% at the end of 2022, whilst the dividend yield of the equity component was nearly 4.5%. A year ago, the bond component yielded just 3%. As investors, it's our job to weigh the risks we see in the markets against the value on offer. And today, we think that balance makes it an attractive time to invest, particularly in fixed income. As a result, we have been steadily increasing exposure to bonds issued by good quality companies that we think can weather the downturn and that offer good yields, always ensuring that we do not have too much exposure to any one company or risk type. In summary, last year's fixed income bear market has opened up opportunities that we have not seen for a long time. And although there are risks to the economy, principally from higher interest rates, we think that we are being well paid to invest and are optimistic about the year ahead.